Hey guys, what's up? How's it going? Welcome to today's video. Inside today's video, I'm going to be sharing with you guys 3 Canadian bank stocks to buy and hold forever. Alright guys, so I've been doing a lot of videos on Canadian stocks, and Canadian bank stocks are some of the most popular Canadian stocks there are out there, and for a really good reason. So in today's video, we're going to be talking all about Canadian stocks. I'm going to share with you guys 3 stocks that I think are the best stocks to buy right now. So if you guys enjoyed this video and you guys like this type of content on the channel, please give the video a big thumbs up, and remember to subscribe to the channel if you guys want more Canadian-based investing content. Before we get the video going, guys, do me a big favor and leave your favorite Canadian bank stock in the comments below. Drop a comment and let me know what you guys think is the #1 bank stock to buy right now. So before we get in the video, let's spend some time talking a little bit more about Canadian banks. So if you guys are Canadian investors such as myself, you guys probably share at least one thing in common with me, and that one thing in common with me is that you probably have at least one Canadian bank stock in your portfolio. So we might not all have the same favorite Canadian bank stock, and we might not all hold the same bank stock, but I guarantee you that we have at least one bank stock sitting inside our portfolios. And I honestly feel that most Canadian-based portfolios should have at least some of the banks, or at least one bank stock as some of the core holdings, because Canadian banks are some of the best Canadian stocks that you can buy out there right now, and they always have been for a long time now. And the good thing about Canadian banks and banks just in general, which make them really cool, is that they're very beginner friendly. It's a very easy business to understand. You know, these are big companies with big market caps, so they're always constantly growing their dividends, and always constantly growing their stock appreciation. So they're perfect for beginners, and I highly recommend, if you guys are a beginner investor, that you could look at some of these big Canadian banks to get started with. And if you look at any of the big Canadian-based ETFs out there, you'll always see that most of the Canadian bank stocks are some of the biggest holdings inside these ETFs, because they're some of the most reliable and most consistent stocks there are out there in the Canadian market. Alright, so I just want to talk a little about Canadian bank stocks and help give you guys some ideas on why I think Canadian bank stocks are so cool. So let's talk about the 3 Canadian bank stocks that I'm going to recommend in today's video. These Canadian bank stocks are in no particular order, so feel free to invest into all 3 of them. I think they're all pretty solid, and I'll share with you guys my favorite bank stock somewhere in the middle of the video. Alright, so my first Canadian bank stock on this list is none other than good old-fashioned RBC, or Royal Bank of Canada. So the first stock on this list is going to be RBC, which is one of the largest banks in Canada. RBC has a current market cap of $109 billion, and as you will see, most of these banks are huge businesses, which make them very reliable and stable companies to buy for the long term. RBC serves 16 million clients within Canada and the US, and 34 other countries, and 61% of RBC's revenue comes from within Canada, and the rest is international. RBC was originally founded in 1869, so it literally has been around in Canada forever, and RBC is Canada's largest bank in terms of market cap, and is one of the largest Canadian companies in regards to total revenue as well. In 2019, RBC reported $12.8 billion in total earnings and $44 billion in total revenue, which is absolutely crazy. And as you guys can see here, in the past 4 years, RBC has done quite well in growing their earnings and revenue over time. And with these constant earning and revenue increases, we can expect the stock to keep growing and the dividends to grow alongside with it. And quarter 3 for RBC was also quite good as well. As you guys can see here, quarter 2 was pretty bad, but quarter 2 was pretty bad for all stocks, including most of the Canadian banks, but quarter 3 has seen a nice recovery, and we can see here that RBC is kind of back on track to growing their income once again. And since RBC's earnings keep on growing, we can expect share price appreciation and dividend growth to increase as well. And as we've seen over the past couple decades, RBC has been growing pretty steadily, so once that recovery starts coming in and kicking in towards the end of 2020, we should start to see that recovery continue going into 2021 and the future years. RBC is currently trading at $100 Canadian on the TSX, and currently has a decent dividend yield, about 4.3% at the time of recording this video. Since the pandemic happened earlier this year, RBC took a pretty big hit like most of the Canadian banks, but RBC has actually recovered quite a bit well. It's still not trading at its pre-pandemic levels of $110 and $109 Canadian, but it is almost slowly getting there, now currently trading at about $100. Right now, I think the stock is undervalued, and I think RBC will continue to grow in the future, so I think this is a pretty good time to pick up RBC, and all things considered, it's doing pretty well. And when it comes to dividend growth rate, Canadian banks are some of the best stocks for this, and RBC is no different. RBC has averaged an annual increase 11.6 as an average annual dividend growth rate, which is absolutely amazing in the past 10 years. And as you guys can see here, those dividends just keep growing as time goes on. So as RBC continues to earn more income, they have more money coming in, they can grow their dividend, and this is one of the best features that Canadian bank stocks have. And because Canadian bank stocks are some of the biggest companies and the best earning companies, they have tons of money to go around. So as you guys can see here, the payout ratio for RBC is currently sitting at about 50%, which is pretty comfortable. It's a little bit higher. You kind of want to see that ideally about 40 to 50% for banks. But all things considered and everything that's happened throughout this year, I think we're doing pretty good. Even sitting at a 54 payout ratio for RBC is perfectly fine. So they have tons of money and tons of room to grow their dividends. RBC's last dividend increase came in February 21st of earlier this year before the pandemic happened. Overall, my opinion is that RBC is one of the best Canadian bank stocks to buy right now, and they've recovered quite well, and they still have a little bit of room to grow since the pandemic happened earlier this year. I currently own a large amount of RBC in a dividend-based Canadian ETF called VDY. So that's the main ETF that I add inside my dividend portfolio. And as you guys will see with that ETF, I do hold a lot of the big Canadian banks. And RBC is actually the #1 weighted stock on that ETF. So the second bank stock on the list that we're going to talk about today, guys, is going to be none other than my favorite bank stock, and that is TD stock. So TD is basically the second biggest bank in Canada, and they've been doing really well recently, and I'm a big fan of them because they do most of their business in Canada, but they also have been expanding a lot recently over the past couple of years internationally and inside the US. So TD was originally formed and founded in 1955, so it's not as old as RBC, but it still has a long history in Canada. Retail earnings account for more than 90% of TD's current earnings, while TD currently has 25 million customers worldwide and 13 million digital customers. TD currently has a market cap of 117 billion, which tells us that they have more than what they need to recover just in case if things go bad into the future. TD is also Canada's #1 bank in regards to total assets, second largest by market capitalization, and one of the top 10 listed banks of all banks in North America. And just like RBC, TD has recorded quite well when it comes to Q3 earnings. As you guys can see here, in Q3, TD has a revenue of $8.4 billion with earnings of $2.25 billion, which is a nice increase from what happened earlier this year in Q2. We're still not quite at Q1 levels, and as you guys can see, this is a little dip in earnings, but this is naturally what's to happen, especially since a lot of TD's earnings come from the US, and the US got hit pretty hard by the pandemic, so I think they're going to have a slower recovery, but nonetheless, TD will definitely recover. TD stock is currently trading at $65 Canadian on the TSX and currently represents a nice high dividend yield of 4.86% if you buy right now at the time of this video. So a few things I want to point out here really quickly about TD, and that is the fact that TD has experienced absolutely crazy growth in the past 2 decades, as you guys can see here. And we look at earnings for TD, we can see once again consistent earnings over the past 5 years for TD. Over the past 5 years, it has reported earnings of 8.2% average per year and a reported EPS of 13.1%. So absolutely crazy growth. And this is really what has allowed TD to grow as a stock and also allow them to increase their dividends so aggressively over the past 10 years. And if we look at the price since the pandemic happened earlier this year, we can see that TD still hasn't recovered quite a bit, and it's actually at a nice low price of about $60 Canadian. Now, it did shoot up over the past couple days from this, once again, the stock rally that happened, but I still think it's trading at such a discount level right now that I think it's a great time to buy this stock and get the nice dividend yield that's relatively safe, sitting at 5%. And of course, TD is one of the safest dividend-based stocks there is out there in the Canadian market. TD stock has been paying dividends for basically forever, and they've been growing those dividends on a regular basis, and there's no reason why TD is going to ever stop paying dividends into the future. So when it comes to dividend investing and dividend growth investing, which is the best way to do dividend investing, I think TD is one of the best dividend-based Canadian stocks to buy right now. And just like RBC, TD has some of the best dividend growth when it comes to all of Canadian banks. See this nice little graph here I managed to pull up, has a 20-year dividend growth, and over the past 20 years, TD has an annualized dividend growth of 10% per year. That's basically, you're looking at every 10 years, imagine your current dividend doubling. So those dividends compound and grow really, really quickly, and that is absolutely crazy growth if you would have invested in TD over the past 20 years. So I don't see any reason why this is going to decrease in the future, and this just basically tells us that TD is a nice solid dividend stock and dividend growth stock to own inside your portfolio. And another nice thing about this is TD's target payout ratio is sitting around the 40 to 50%. Now it's a little bit above 50 right now, but that's perfectly okay. As I mentioned before with RBC, payout ratio is a little bit higher because everybody suffered a lot of losses, but the fact that they're able to keep it relatively close to here is really nice to see. So big takeaway from this, guys, is that I honestly believe that TD is presenting us a very unique opportunity to buy this amazing stock at such a discount level. I think a lot of these Canadian bank stocks are undervalued right now, and although some of them have risen up a little bit higher than others, TD is still kind of sitting low, but that doesn't mean the stock isn't going to do well in the future. I think they're going to be one of the best Canadian bank stocks that's going to rise the most in the future, but right now they're still a little bit down because of the pandemic. So I think this is a great opportunity to buy TD at a super low price, and then those shares will grow exponentially really largely in the future. The third and final bank stock that we're going to talk about in today's video is going to be none other than CIBC, or Canadian Bank of Imperial Commerce. And the nice thing about CIBC is, just like with RBC and TD, CIBC has a strong history of growing their earnings over time, growing their revenue, and Q3 once again for 2020 has been pretty decent for CIBC. So CIBC is a result of the merger between the Canadian Bank of Commerce and the Imperial Bank of Canada that happened in 1961. CIBC has 11 million customers and serves customers in Canada, the United States, the Caribbean, Asia, and the United Kingdom. CIBC also owns Simply Financial, which is a popular online bank which used to be under the President's Choice financial brand. CIBC currently has a market cap of $47 billion, making it the smallest bank on this list, but still is a pretty darn big company at the end of the day. CIBC stock is currently trading at $106 Canadian on the TSX and has a nice high dividend yield of 5.5%, almost near that 6% range. Since the pandemic happened earlier this year, CIBC has actually recovered quite a bit over the past couple months, and actually my own portfolio is one of my better performing stocks since the pandemic happened. Currently trading at $105 is pretty close to what it was trading at pre-pandemic at $110 Canadian. And CIBC, of course, has a strong history of strong stock appreciation. As you guys can see, the stock did dip quite a bit way back in the day of the financial crisis, because back in CIBC was a smaller company, but now I think there'll be a little bit more of a bigger company. They can handle the dip a little bit better, and that's why we've seen such a big recovery from the pandemic from CIBC. And of course, at the end of the day, the dividend yield of CIBC is super attractive, sitting at almost 6%. I think it's in a pretty good position to buy the stock for the stock appreciation to come in the future and to pick up a nice dividend yield right now. So even though CIBC's stock price might look like it's grown pretty well and it's a little bit overvalued, you might think, I honestly think it's still an amazing stock to buy and hold for the long term. But right now, maybe there's some other options like TD stock that might be the better undervalued stock to buy right now. But regardless, I still think CIBC is worth holding inside your portfolio for the long term. So overall, guys, I think CIBC is a pretty decent stock to add to your portfolio. I currently own a couple shares of CIBC stock once again, and various ETFs inside my dividend-based portfolio. And if you guys do want to look into ETFs that hold all these bank stocks, definitely check out one called XFN by iShares. There's a bunch of different ones you guys can find out. I currently invest in one called VDY with Vanguard, but there's a lot of different ETFs that hold a lot of these bank stocks. And the nice thing about this is you can buy the ETF and you get all the Canadian banks here. So that's an option for you guys if you guys want as well. But this is a good one from iShares. Another good option would be VDY from Vanguard, which is the one I have in my portfolio as well. Alright guys, so that's it for today's video. I hope you guys enjoyed the video. Once again, let me know what you guys think in the comment section, and please give the video a big thumbs up if you want to see more Canadian-based investing content. If you guys want, I'm going to link to my top 8 Canadian stocks to buy video. I'll put a thumbnail or an end screen that you guys can click on and watch that video. That goes over, I published that video about a week ago. It goes over my top 8 Canadian stocks that I recommend you guys take a peek at. So check that video out if you guys want to see some more Canadian stocks to buy. So that's it for today's video, guys. Let me know what you guys think in the comments. Thanks for joining me here today, guys. Take care, and I'll see you guys later.